Nvidia investing up to $100 billion in OpenAI. The first deployments of this equipment could start next year. Our guest has some questions about this deal, along with plenty of other observers. He is the only analyst on Wall Street with a sell rating on Nvidia. We're joined by Jay Goldberg, senior analyst at Seaport Research Partners. Great to see you, and thanks very much. You reckon a part of this deal is that Nvidia wants to bolster OpenAI as a player because it's concerned that the likes of Amazon and Google might turn out to be fickle friends. They in turn are wary of the power of Nvidia.
That's right. For the last 10 years or so, data center semiconductors have been dominated by the buying power of a handful of companies, the hyperscalers, internet giants like Google and Amazon and Microsoft. And they've had a lot of negotiating leverage against the industry, and that's shifted with AI. Right now, Nvidia is very much in the driver's seat. They have the scarce resource that everybody wants, and I think one way to view this deal with OpenAI is strategically for Nvidia. It is positioning OpenAI as a sort of counterweight to the legacy power, or the power of the legacy incumbents. It's an interesting move.
That's interesting, because down the road, if these incumbents do develop their own chips or get alternative sources, Nvidia would like to have OpenAI as a powerful ally.
That's right, because all of those incumbents are developing their own chips. They're working with Broadcom to bring out their own flavor of semiconductors. And that is like the only competitive threat to Nvidia at the moment is this hyperscaler custom silicon. And OpenAI looks like it's going very much hard in the other direction to being largely, predominantly Nvidia-only shop.
But, I mean, OpenAI will be massive, though, presumably, if all this investment and spending goes through.
That's a big if, though, right? There's an if in that there, right? Where are they going to get this money? They've signed up with a $300 billion deal with Oracle. Nvidia is bringing $100 billion. Where's the rest of the money going to come from? I think they can raise it. There's a lot of interest in the sector, but it is hard to raise money. This is a lot of money we're talking about. So it's going to be interesting to see how they raise it and what other concessions and economics are required to get the deal done.
And you say that it could be tough for Nvidia to account for this massive investment if the return isn't high enough?
Well, I just look at it as this somewhat circular motion here, where they're essentially providing vendor finance to, right, they're buying demand. Here's $100 billion, OpenAI. Now you can use it to buy our product. This is the kind of thing we see in bubbles, right? And I'm not saying that there's anything wrong with the accounting specifically. It makes me wonder, what's the true situation for underlying demand, and what multiple do we assign to the Nvidia revenue that they're getting from OpenAI when they're essentially paying for it?
Yeah, it does seem kind of circular, doesn't it? I give money to you as long as you buy my equipment.
That's right. That's right. And so this kind of thing works as long as until it doesn't, right? We've seen this in past cycles before. Companies provide vendor financing, and that's great on the upswing. When there is a downswing, and there always is a downswing, it works in reverse. This kind of stuff is a multiplier and amplifies the direction of change. And when you're going up, it's good, and when you're going down, it's extra bad.
You have a sell on Nvidia. You're pretty unique. Your thesis is yet to play out, but tell us why you're pessimistic on the stock.
I mean, I think of this more as a underperform, right? We've seen that this year. Nvidia's upside is largely priced in, right? The street has a really good sense of what the capacity of chips that they can get, right? They're coming from TSMC. There's capacity constraints there. We know how many chips TSMC can produce. We know what Nvidia Blackwell output should look like. And once you know that, once you're sold out, and we all know the number, what's the upside? Like, there just doesn't seem to be much upside for Nvidia this year, given what we know about it.
Is the valuation at almost $4.4 trillion, is it outlandish?
It's a big number, but at the same time, the one big difference, I think, between, say, this AI bubble and what we saw with .com in the 90s or other past cycles is the multiple isn't that high yet. So there is some room to grow from this, but it's getting up there, right? It's sort of priced out. I think it's going to underperform the sector. And there are these sort of longer term questions about AI adoption, AI demand. Long term, I think AI is going to be a fundamental part of our lives, but I don't think we quite know what that looks like yet. And any technology as big and as disruptive as AI could be, whatever, in history, we've always seen these things get adopted in waves, right? It's never a straight line. So I think at some point we'll pull back.
Jay, thank you very much indeed for joining us.
Thank you.
Jay Goldberg, Senior Analyst at Seaport Research